You've nailed smart money structure, but why are your trades still failing? There's a missing piece most traders overlook, something that turns all that structure into consistent profits. In this video, I'll reveal exactly what you need to see to finally get your entries right. Stick around because once you get this, your charts and your trading will change forever. If you're starting to understand structure but still feel stuck when it comes to placing real trades, this is where it all clicks. You'll finally fix the missing half of your strategy, the part that turns smart money structure into trades you can actually take with confidence. No more second guessing, no more late entries. Once you see this, your charts will never look the same again. Click the link in the description to get started. Before we go into the actual next step of supply and demand, let's look at exactly the process you need to be applying your market structure. So you're getting this mapped out correctly first. Then we'll look at that next step of applying supply and demand to capture those trades. So the first thing we'll understand is that we're reading this with a candle by candle approach. And the way we're going to use it is we're looking for our actual close up and a close down candle. Now what I mean is we see this candle here, we put an arrow above it. This candle closes below the previous candle's low. Now before this we see no closes to the downside. Let's continue through this price and see if we can see another close down. Well, we can mark off this candle. This candle right here we've got marked. This closes below the low of this candle. And again, we can see this candle does the same thing. So understanding exactly where these closes are coming down is very important. Now this is for a bullish trend using the smart money structure technique. When we're looking at a bearish trend, we'll just flip that on its head and we'll look at using the close up. Now by that, what I mean is when we have a bearish trend, you're looking for where we see the candle closing above the previous candle's high. Very, very simple. So the first point we'll look at, we have a low here in the market. Let's go from this low to the first time we see a close down. That appears right here. So wherever we see the close down, we mark off the highest point. We'll mark off this high as our highest point. Now what this becomes is our valid level for a break of structure. I'll write this out so you can see exactly the terms. So we have a break of structure to the upside. This indicates the market has continued a bullish trend once we see that body close through that level. Now again, if you're not sure when it comes to a valid break of structure, there is a video in the channel. I'll leave it linked above now if you want to watch that later as well. It helps you understand the valid break of structure. So once you identify the valid break of structure, we then look for what we class as a valid low in the market. Now this becomes what we call a strong low. And you'll see how this works when we add that next step of supply and demand. So we look back and we look for the last time we see the close down. Well, that becomes this arrow above this candle. That's our last close. That's the lowest point. From here, we mark it across and we'll label this as our strong low in the market. So this becomes our strong low. Now we do the exact same process now for our high. We look for where we see that first close down. So as soon as we see this candle closing down below that candle's low, we can mark it off as our high. This becomes now our weak high in the market. So we'll mark this off as what we call the weak high. And what we expect is that the price will want to continue to run that weak high with the bullish trend. So now we have our trading range. This is where we look for our trades. We have our current low in the market. Let me just grab a different tool. We have this is our current low in the market to this is our high. So this becomes our trading range. And what we're looking for is understanding how we can use the next step with applying our supply and demand zones to identify the best possible trade entries. But right now, let's go through how we can apply this next step. So what we're looking for is when we're going to mark out our supply and demand zones, we're looking for the last sell to buy move. This is the last sell candle in the sequence. And what we can do, we can mark out the open price to the low of that candle and we can drag a zone across. And what this is called is going to be classed as our area of demand. Now we're on a 4-hour time frame. Let's say we class as a 4-hour demand zone. And we look for price to pull back into that demand zone where we look for entries out. And we can basically look to enter at the demand zone. This is what we class as a set and forget entry. And we look to target the previous high. Now, like I said, at the end of this video, we go through a 2 time frame step. This will help you to identify the confirmation entry, where you can start using this next step with supply and demand to take a confirmation entry out. But this is to show you that next step, once you've got your smart money structure correctly marked, that's how you mark out your zone. Now, before we go over to the actual price chart and we see what this looks like, let's just continue from this point. Once we see this big bullish candle pushing through this high, what does it now become? Well, this becomes actually a BOS, a break of structure, and it's a valid break of structure. Why? Because we have a nice close through that level. Now, the last sell candle is going to be this one. From this point, we look back, that's the last time we see the close below the previous candle's low. And what we can now do, we can take this level here and mark this out as our new strong low in the market. And what does price do from this point? Well, we look for gain, okay? We don't have our valid high this time, but we can still mark out this as a valid area of 4-hour demand again. Let's say we're looking at our 4-hour demand here. So mark it out as a demand zone. What does price do? We break the upside, it pulls back, retests that demand zone, and continues in that direction. Now, it's much better if you start applying the strategy with a valid high and a valid low to create a trading range. Trades like this, it takes a bit more experience. And I've got something inside the 90-day profit trading system to take your structures to new levels. But let's now go to a price chart and we'll start looking at how you can apply this smart money structure with this next step of supply and demand to help you with your trade entries. Now, I'm on the 5-minute time frame of the pound US dollar. Now, you may expect me to go on to a higher time frame at the 4-hour, but this actually can be applied to lower time frames as well as the higher time frames. So let's look at current price with moving bullish. Let's look back a bit. Okay, so we've got a nice area here, actually a perfect area to understand how you can apply this. So let's look at our structure. We're going to apply our last break here to the upside is around about here. We have a break to the upside, and this is understanding your smart money structure. We'll go from this point until we reverse bearish. Let's zoom into those candles. So once we have that valid break here to the upside, we look back for what? The last time we see the close down. Now, the reason I'm doing this right now like this is so you can see where we go from bullish to that bearish reversal. So you can start to see where we shift with looking for the close down candle to the close up. This is going to create it's going to create a strong low in the market. And once we have the close down again, I'll mark it off again with another arrow. That close down is going to create the current range high. Now you can see that the market actually goes down, closes through the low. This gives us a shift in structure. Very quickly, a shift in structure. And once we see a close up this time is when we can start marking off our valid low. So now we have this as a valid low. We look back from this point, where do we have our valid high? Well, this is the last time we see a close up right here. This candle closes above this candle's high. So we now use this high here as our highest point for a valid high. And what happens here, this is a liquidity sweep running above this high into this imbalanced candle. Now, more of this, again, you can learn inside that 90-day profit trading system. But the focus here is to understand that the market has shifted structure bearish using your smart money structure technique. We do have here an area of potential 5-minute supply where the market is run above a previous tested area of supply going deeper. And that's understanding the difference between a fresh and a tested zone. So we continue to push down. We continue to mark out our structure. We have a new low here created after the breakout. Why? Because we see the close up here on that candle. And this is our previous candle. Okay, we made the close up. That means this becomes our new valid high. See, the structure itself can be applied to multiple time frames. We continue to push down. Where's our next close up? Well, let's mark it off. There's our next close up. And you'll start to see how we can now use supply and demand. This becomes our new low for a break to downside. We look back, there's our next arrow. And if you add those arrows to the chart, it's going to make this easy for you. This becomes our new high. So we have an area here of potential supply. Now price never came back to it. You can see how you can use those structure areas for our zones. The next area of supply. Price came back, tested it, and ran to the low. Okay, using your smart money structure levels, you can apply the next step, your supply and demand zones. You're starting to see how we read that smart money structure with the next step to help your trades. So we have a new break of structure here. Let's follow price again. We'll mark it off. We come down. Our first candle closing up is this one. That means this becomes our valid low right here. We look back the last time we had a close up. Well, did we close up here? Yes, we did. Okay, we did close up above here. After we swept this low, we went back, we swept the equal highs, and we ran lower. This means this high becomes our valid high. And once again, you could use this as a valid area of supply. Now, price just comes back into imbalances here. That's the next step once you understand your smart money structure and supply and demand. But once we identify the next breakout, again, we do the same thing. Where's the next close up? Right here. What does this give me right here? A breakdown. And then we can mark off, we look back, the last time we closed up, again, mark it off with an arrow, is right here. And we can mark off the highest point from that point here as our high. And again, we can mark off this as an area of potential supply. Now look where the market does eventually come back into. It's also a reason you keep your old zones on the chart because they will come in useful later on. Now, when we see the break here to downside, this candle closed above. That means this became a valid high. And eventually you can see the market breaks out, pulls back again. This is where we can see a quick shift. We break back down. Again, this high and this high is equal. And we do have another close up here. So if you're wondering, this is your close up candle where we create the low and where we create the new high is equal. We then have the next close up using your smart money structure technique. Where is it? We just closed above on that bullish candle. That means this becomes your new low. So we break the upside and we shift through that level. But look where the market goes into. It goes into previous supply. But we'll keep following price. So once we break out, we're now in a bullish movement and we start to see the bearish candle closing down, which creates this as a new high. We break out once again. Let's look back. Where's the last close down? There. So where's our new low? It becomes here. And we break out back down again. So you start to see how price quickly shifts. Now this is going to trap a lot of traders. And there's another step we can apply to this. Before we wrap up, if you're tired of second guessing trades or stuck, wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today, which we'll do in another video. But right now, start understanding your structure. We see this is a closeout. There's our previous close up. Make it simple for yourself. Add those arrows if you need to. This becomes a new high and we can mark out a new area of potential supply. It's a new area of supply. So price comes in. Now, whether you mark it from the low of that candle, you want to mark it from the open price, doesn't really matter. As long as you're marking it off where the last buy to sell move comes from. So we break out, we pull back. We have a new low. Okay, this low eventually gets broken as well. So we zoom out. We can start to see now that supply is in control. This was just a short pullback reversal to take out some liquidity and we create a new supply and off we go to downside. Once we have the next breakout, what do we have again? The next supply. See how we start to stack. And once you see that breakout, there's your next close up. This becomes your next low. What you can do now is take it to the next level and understanding the 2 time frame approach, where you can look for those confirmation trades. And that's coming up right now.